What's happening, guys? Another Sunday video, this time for May 18th, 2025, and the week ahead. Sitting in today for Chris. It is his wedding weekend, and unfortunately, I could not make it because it's Aiden's 5th birthday today. So, stayed home for that. It's also Kyle Williams from Clover's wedding weekend as well. Couldn't make it out to Mexico for the same reasons, but I hope they both had a fantastic wedding. Sunday videos. I hope you guys are enjoying. I think Chris is a phenomenal resource. I think he's been adding some fantastic value. I think he brings a lot of the similar concepts that I brought, but also more of a macro view, some of the options type stuff. I remember the Palantir move that he kind of outlined before it happened, and why he was interested in those particular or in that particular situation. Same thing with, right now with market volatility and auctions and, gold moves and, all that commodity type stuff. He's really good with that. So he's been sharing a lot more trades, a lot more open with his macro kind of views. And I think it's been a really, really good addition to what we do. Yeah, it's been a while. Pretty rusty. We'll see how this goes and see if I can one take it like the old days or how that ends up going. But I'll try not to bore you with, too much of the stuff. But last week of April, took a vacation finally again. Full, relax without, trading. Didn't even bring a laptop. I had a couple, kind of swing type positions. I think CEP was going at the time and a few other things. But other than that, I mean, just full disconnect, which was really needed because honestly, May has been my best month so far. And last week was my best week of the year. So I hope that continues. But I haven't, just like last year, just like this year, the things that I've said, I'm not going to try to push it. And yeah, there's a little bit of FOMO, and yes, people are absolutely crushing it. But I'm also trying to stick true to what I'm trying to do and balance out something that I've failed to do for probably 5 years. Try to pivot, try to put in the same amount of effort that I put into IU and the community, into family and the kids, and kind of being present and all that stuff. So it's easier said than done, I will tell you that. I'm thankful. I've been working with Dr. Katz, which was a Lance recommendation. He's been super helpful as far as keeping me accountable and making sure making the hard choices easier is a good way to say it. But it's definitely continual work. And one of the most recent things, what I tend to do is I'll get off desk and then I just kind of venture back on the desk and find it another trade again, right? And some of the best traders, the less they trade, the better, right? They're waiting for their A+ setups. They're waiting for the big opportunities where they can put risk on. And one of probably the best trader that I know, we catch up every quarter and kind of just chit chat and stuff. But he's always about where, whatever that risk might be. Let's just say it's 5K, 20K, 100K, 250, whatever it ends up being. Where can you risk that? It's not about how much you can make on the trade. It's about having an opportunity where you can confidently risk X, right? And that's how he looks at every single trade. It's not about what you can make. It's about how can you confidently scale into this setup, risking X, right? It's a good opportunity, A+ opportunity. More often than not, you're going to be right. And does it have enough liquidity to risk X? And I thought that was a different way, a unique way of looking at things, rather than always kind of looking at what the opportunity is here. But really, how can I put on X risk the safest? And is this setup allowing me to do so? And if not, then skip it, go to the next. But one of the things that I've been doing is replacing, bad habits with better habits, right? And most recently, fortunately for me, Jack lives in, very close to me, as well as Matt, and both traders, both have been on social, and Matt has in the past, but obviously most of you guys know Jack. But they started doing, midday, noon workouts, like CrossFit and stuff. And Normally, it's not something that I would do. Normally, I'd probably sit at my desk. But when you think about, sitting there and most of the stuff, I would say since I've done that, there's probably only one home run trade that I've missed. And for most of the time that I've come back, stocks are in the same kind of range, same price, right? So there's a lot of wasted time midday. I perform the best pre-market until probably 11 a.m. And then usually if there's a big opportunity midday, that's something that might happen at 2 or 3 p.m. into the close. So that middle of the day, there's so many hours that you could be using for better things. And for me, I have to actually sort of plan that out. I have to have a reason to get off of desk and literally get out of my office. Otherwise, I'll hear an alert go off. I'll hear something, kind of happen, and I'll come right back, and there I am until 4 p.m. So that's something that I've worked on, and an easy way to do that is replace it with something better. And so that's what I've been kind of working on is each day at noon, get out of there and try to replace it with a better habit. Get me in that mode of getting off of desk at 11:30, 11:40 every single day, and see where that goes. So that's some of those updates. Otherwise, IU, a lot of you guys, I'm sure you've seen the tech advancements. This past year has been a ton of investments, not only into moderators and content and things like that, but I mean we're really getting heavy into investing in tech and development, and we've brought on a lot of programmers. We're building something really sweet that's going to probably come out at the end of the year. But as you guys saw, the IXHL, both on the long and the short, and that's really just something. And I got to figure out how to use this, but that's really just something where rather than having all these different applications, you've got your news, you've got your chat, you've got your scanners, you've got all that kind of stuff. It's all bringing everything into one. Your eyeballs never need to leave IU. And so, for example, IXHL, there's a lot of different names that I've, kind of monitoring and waiting for, whether it's particular keywords, phrases, things that are in filings, or just one that, you're just sort of waiting for that PR because there's heavy delusion ahead. And that as soon as that PR comes out or that 8K or whatever it may be, that the intent is to pump this thing up before they end up, raising the money. And so they came out. There was an 8K that came out and posted it immediately just because it's in my face. I got the alert. So just like the SMCI, the night that they reported, if you remember that, I had all the alerts set. And it's not about looking at different programs. It's about just right where your eyes are kind of trained to be at during the day. So this particular one was a really nice one that came out. It was under a dime. I think I got some fills under a dime, 0.0998, up to a dime, 13 cents, almost 14 cents on some. But really, really nice breakout. And obviously, as you guys saw, it went over, I think $1.25 or something like that. Then on the flip side, we had the 8K come out with the delusion, where they paid off a bunch of warrant holders and decreased delusion for now until they do the cashless warrants. But you can kind of see the speed at which that came out. And that provided a really, really great opportunity. And I still can't believe that they opened the halt up when it slammed down at 70 cents. But they did, and it gave a huge opportunity. And I just kind of added until I ran out of borrows at the 75, 78, 70s, so on and so forth. Those two trades alone with the tech that we've built, is what it's about. It's not about nailing every single move. It's about having the resources, having the tools to put something in front of you that, whether it's once a week, once a month, or once a quarter, that's a game-changing opportunity, something that you're preparing for. You've told it what to do, and it just falls in your lap. And that's an example of, two examples in 1 week of the same ticker and the same big opportunities from tech development, and then obviously sharing it with the community. So I hope that, you guys are taking advantage of that stuff. We did do a trial here and there for traders to check out IU. And the reason really for that is, as I said that time we did it, we suck at marketing, all the tech that we have. There's just so much every single day. Max is working on something, or the team's working on something, and kind of soft launching, beta launching different tools. But not only do you have this, you have the scanners. You get the high day, low day hit list, which is by far my favorite scanner. And I literally do not. I still have the other trade ideas and things like that up, but I don't think my eyes are trained to look at them anymore. The only one that I'm actually trained to look at is the high day, low day top hits scanner. So it's really replaced all of my scanners, which is it says something, because for me, that's all I need. And it talks to you, it yells at you when there's things that are going crazy. Let's see, what else do we have to talk about? I wanted to talk a little bit. Let me just switch this over to a chart. I wanted to talk a little bit about creating baskets. And for me, what I typically do if I'm trading the market. So if you're looking at SPY, I'm every now and then I'll trade options on the SPY if I feel confident about a particular move. If I feel extremely confident, we have a lot of high volatility, I'll trade zero dated options on that particular day. But for the most part, and even thankful to Twitter, because I'm not a pro at options by any means, I had asked, and most people said to go out basically 3 days. Usually I've been going out 2 or 3 days. But that's really, really helpful. You're not going to get the 2, 3 to 1,000 percenters, but there's a lot of doubles with much less downside if you're wrong, much slower because you've got a lot more time. So it allows you to still get in there and get a good chunk, but just not with like this 90% hit on the zero dated options. So at any rate, when I want to trade the SPY, it's very rare, unless I do the options, that I actually trade SPY. Typically what I'll do is I'll create some sort of basket around that. So I might be trading something like a tech heavy basket, whether it's NVIDIA, Palantir, those are usually go-tos. SMCI is another go-to. And what I do is I kind of look for it, if it's trading within, sort of the similar range as SPY, I look for those ones, look for opportunities on those particular names. So if SPY starts to get heavy and break down, I'm looking to fade Palantir, NVIDIA, SMCI, could be a Tesla, it could be lots of different things. But whatever's the friendliest trader, whichever one has the most volume, most range, and the best setup. And what I do is I look at which one has the most relative weakness, right? If I want to go short. If I want to go long, I want to be long the one with the most relative strength. So I create baskets. In the same thing, most recently we've had Quantum, RGTI, you have QBTS, you have QUBT, right? And they're all breaking out. And so if you look at this daily, this is, obviously has a big history. I'm sure most of you guys remember that one. And same thing, RGTI. This is when Jensen had, talked negatively about them. But for the most part, they've all had major runs and came all the way back, except QBTS, which held most of its gains. But what I'm looking for is I will watch QBTS, QUBT, and RGTI. And I might start into each one, maybe all three. But I'm going to be looking for the one that starts to fade while the other ones are staying heavy. I'm looking for the one that has the relative weakness versus the peers. And that's the one that I'm going to scale into the trade. And then if it continues to go down, the other ones start to float down, I can scale into those as well. But the same way, Palantir, NVIDIA, SMCI, I'm going to focus on the one that is weakest out of the bunch if I'm looking for the short. And the same thing on the long side. So I always try to create a basket, whether it's, the daily drivers, which is what I kind of call the ones that I'm looking for on the SPY, whether it's Quantum. This past week, I'm looking at all the Quantum names, which ones has, the direction that I'm looking for, which one is the weakest out of the bunch, and focus on that one. And even something like Bitcoin, right? Where my go-tos might be Mara and MSTR, somebody else's might be Coin, or some of those other ones. But I always try to spread it across a couple and then focus in on the one that is proving me right the most. And the one thing that I would say to be cautious on, and this has caught me sometimes too, is, sometimes you size into, say, RGTI, right? And you have this feel that quantum's going to fade, and you start into QBTS, RGTI, and QUBT, right? And it's all a modest position. It's a starter size. And then it might not be doing exactly what you thought, or maybe it is, and you scale up. But you're still only in a smaller size on each individual trade. But the problem is you have 3 times the exposure on that basket. And that's something just to watch out for, because sometimes I'm like, why did my P&L just shift so much, right? And it's just because you're concentrated in the same, basically, position, right? You're basically in 3 times the size that you really think you are. And that was one thing. It's simple, but you also have to be cautious if you're spreading risk across, that you don't size up the same amount in each one, because that's when you get in trouble, because your starter is really actually not a starter now, because you've got all 3 going in the same sector. And if you're wrong and it goes the other way, you're ramping up, and it adds up pretty quick. So that's one thing just to be cautious about. One other thing that I wanted to talk about is one of the most important parts being on the short side right now. And the most important part of the trade is the cover. Most people want to be patient, let that winner work. But for me, anytime I reactively trade, meaning we've got some sort of parabolic, some sort of clear out type move, whenever I do that and it slams down, I want to be proactively covering. A lot of times you'll see it just be one little soak and then right back up, right? And I'm thankful that I covered. But the times that it stays heavy, I can rescale back in. And that's the most important part, because I see a lot of people getting chopped up on the short side when there's plenty of opportunity, but they're minimizing their chances because they're trying to force their thesis to be right. And right now we are in a very, very risk-on style environment, meaning it's a very, very hot cycle. And to dim that down even more, it just means that people are buying long. They're not selling. Most of the sellers are shorts. And if it stops going down, they're going to get squeezed. So when things pull back, there's liquidity pockets, right? And as soon as the volume comes out to the downside, that's it. It's thin to the next liquidity pocket on the upside. So what happens if you're overstaying? Then there's a good chance you're panicking out at the top of the channel, or if you're long, there's a good chance you're panicking out at the bottom. So you just need to kind of be proactive until those levels clear and start to break down, or start to firm up and break out. What else? Liquidity traps. You guys should all be familiar with those. We've done a million videos on those, but those are just working incredible right now. I would say the biggest problem that people have with liquidity traps is forcing that thesis to play out after it already works. So sometimes I think KLTO was one. Yeah, so this was a nice liquidity trap where we've got basically 529 million shares traded. Then the next day there's only 13 million. So this Friday it opens up and we've got this huge 50% rip, right? A lot of volume, and then it just kind of peaks out and it stays heavy at that VWAP level. This is just a good example because it's recent. If it stayed strong at VWAP, then liquidity trap is still, in play. If not, you should assume that was the cover. You should assume it's played out at this point. Just because it's a liquidity trap does not mean that it has to play out. It's about understanding what you're looking for. And if that cover comes in, then move on. If it comes in and then it starts to firm back up, then it could potentially become a perpetual squeezer. But a lot of people will stick around just because it ramped up 50%. Maybe they didn't take it off. Now they're trying to force, well, it's a liquidity trap setup, it should go. Well, you're anticipating that cover. If that was the only cover that was left, then it's going to fade back off because they use that liquidity to sell into, and then it tapers back down to where it came from. So just be cautious of that. But yes, they have been working so incredibly well in this market. It's been really, really nice. A couple things that I wanted to go over for traders that are trying to build accounts. And you don't even need to be just an account builder. This is a great trade for anybody. But one in particular, I would say, if you're trying to learn how to scale up, a lot of people that are, I think Lance says it, if you're in poker, if you're always playing the same hand, sure, you might have some longevity, but you're never going to, get a big stack, right? And you need to be able to push when you have a good hand, right? And so most people that are trading that don't really know how to scale up or fail to scale up, there's never going to be that compounding in your account. It's always going to be just, okay, you win, you lost, you win, you lost. And you're just kind of slowly grinding up. But you need to find out how you win, you lost, you really win, you win, you lost, you really win. And the really wins, people have a hard time identifying, especially if you're new, especially if you only got one shot, especially if you're a smaller account. And I personally think the bounce shorts are the best way to kind of test that thesis that your ability to size up. So, for example, this NXTT was a great big runner, and forget the front side of the move, forget all that. What I'm interested in is these couple types of clearouts where if you go and put a line right over here, and we were using 360s, but you can kind of see that, it squeezes out over here and starts to fade off. The next day it comes back, clears out that level. I absolutely love that trade post clear out for that unwind. And that's something where I'm more comfortable putting on more size than I would be on the front side of the move. Because in the front side of the move, you don't know, are you going into a circuit? How high can it go? Is it going to pop like it did from 2 to 3 to 4 to 550 after hours, right? And the same thing too, looking at the prior levels of resistance and, the clear out levels, you've got this nice level or this nice ceiling over here, fades off, comes right back up to it. You've literally got the same trade again. And you don't even need to try to time it and get the top, but flushes down, pushes up, fails VWAP. Very, very clean opportunity. And for me, that's a great opportunity to size and more of a heavy conviction type of fade. And I think that is a really good way for somebody to start to build up their account more so than just having maybe a couple wins, and then one loss takes it all. You need to start having your winners really, grow. Same kind of situation here where we're not talking about nailing this huge unwind. We're talking about the rally, the bounce short. And if you look back, I think this was on Thursday or something like that. But this thing came up and, it's pretty much flat all day. You're coming into 3 p.m. and all of a sudden they just kind of squeeze out all the shorts, right? And so for me, I want to let it, kind of squeeze out, clear out, sit back, clear out, and then a very nice clean fade. Another similar opportunity where it's the backside of the move, squeezes up, clears out. We had the same situation on devs. This has been actually quite a few opportunities, but you can kind of see where it swipes into prior resistance levels. You had the same thing with ICCT. This was a known runner from the past. I'm sure it's very familiar to many. But I always keep lines on my chart. You can see where it kind of cleared out, sits back under that, and then fades off. And that level was actually from prior runs over here where it had trouble. So I always try to leave my lines on the chart so that I can see where it had trouble the last time. And I think that's, extremely helpful. I have a new platform on this computer, so that's why it's not on here at the moment. And I'm hopeful that I can bring all my old lines over, but I am not sure if I can. But at any rate, very similar situation where it goes up. You don't have to be a hero and do it on the front side. Let everybody else get squeezed out. And we've said this before. Let everybody else pay for the information. Squeeze out, sits back, and then nice little fade throughout the rest of the day. And then same thing. Forget this trade right here. Same concept as that NXTT. We're coming right back into this ceiling. So you can kind of see where it flushed down. It had trouble VWAP, and then starts to fade. So 330 becomes the key. Then the next day, guess what? We go back up and kiss that 330, clear it out, stays heavy, and unwinds. So same kind of situation, and maybe the same thing on something like kids, where it kind of goes back up prior level over here, clears out, sits back, unwinds. So this is a great way if you have trouble sizing up, off the open, if you don't know if you're on the front side of the move, back side of the move, forget the initial run. Focus on the second part of the run where it's already done its run. It's already squeezed everybody out. People aren't talking about it anymore. And then this is sort of that last hurrah where like the last little bits of shorts are like, screw it, I'm out. And then people that were long are like, oh man, it's coming back. Yay, I'm going to add. And then once it fails, it's going to bleed out. And so that's a perfect example. What was that? 1, 2, 3, 4, 5 examples of the same situation. Also, understanding where you're at in the market, right? So people tend to associate the whatever is moving the next day with prior stuff, right? So NXTT is going the day or two before devs, right? So this particular move was running and it literally went right into the bell. This is the bell right here. So, it's running all day and it closes towards the highs, it consolidates and then takes off after hours. So the very next day or the day after, I forget exactly, but same situation where devs was going, nuts, and it's looks literally the same as this NXTT setup where it's going, and then we're coming into the close. Everybody gets excited, and it still ends up closing right around, I think it's 130s or so. Let me go back to that. And so basically you've got right over here, this is the close right here, right? So I think it closed 123. So everybody in their mind is like, all right, this is the next NXTT. So going into after hours thinking this is the chosen one, you've got about 15 minutes for it to prove itself, right? And so that was my goal, my thought is everybody, why would anybody sell when NXTT just did the same exact move into the close and then it doubled after hours, right? So everybody right now is thinking, all right, I'm long NXTT. This thing's going to go to 2 or 3 after hours. If it goes back up, clears out that prior high, fails, tries again, stays heavy, what do you think is going to happen? People are going to start to second guess their game plan. Everybody's crowded to the long side thinking that it's going to be the next NXTT, and then down it goes, right? And so that was a really good opportunity. That was a short that we had in the room, but just kind of understanding where you're at in this market. And that's really what you need to understand in this current market environment. What are people looking for? KDLY came after, KDLY was this recent one, if you guys remember, it went to 30 or something pre-market. But the day before we had, what did we have? Was it UPXI or something like that? It was another one recently. So people associate, all right, well, this is the next UPXY or this is the next XYZ, whatever it is. And you need to understand where you're at in that cycle. And as long as people are still excited and chasing, great. Now, I will say the faster things ramp to the highs and the more volumes up top, the less chance it has of squeezing pre-market. The more it kind of comes back into VWAP or under it, the more chance it has of squeezing. And Chris and I did a video on squeezes that was on the channel maybe about 2 weeks ago or so. But one of the terms that he used, or the way that he used to describe it, is you're inviting shorts in, right? And so a lot of times what you'll see is these squeezes, and same thing actually with Top W on in pre-market on Friday. It actually did the same thing, right? So it has that morning ramp, right? So it slams down, invites some shorts in, squeezes everybody out. Okay, made it through, finally back under VWAP. As long as it stays heavy, attempts to go through VWAP, and you can kind of see it rejected, starts to fade off again, and then bam, right through. So they've been inviting and basically baiting shorts under that VWAP level only to squeeze them back out and through. What I look for is I look for the prior highs. I look at where it was having trouble before. So, for example, this top W that we traded on Friday. This was an idea to short once 1150s peaked out. But I always like to put a line over here and then assume that this is all folks that are caught on the wrong side of the move. Once it comes back under and tries to retest back under or back over and fails, that's when I start to get interested, because now we've got the longs buying dips. They've been proven that this is the right thing to do. We had the early shorts that came in, got squeezed out. And now if it stays heavy, you're going to have those dip buyers that are going to now dump. And then you already have the shorts that got squeezed out. So this was a really good opportunity. Ended up fading off. They ended up catching it and consolidating it throughout the day. But a really, really good opportunity, really good example of clearing out that prior high. And my real interest comes after that prior high becomes resistance again. Otherwise, if you're trying to pick tops in this market, you're really getting run over. The best thing you can do is assume that stocks are going to hold. The best thing you can do when it starts to go sideways over here is assume that it's going to go higher. It's fine to cover. It's fine to cover at least some, because then when it ramps up, one, it's not as big of an issue, or two, if it stays heavy, you can always rescale. So that's about it. Just cramming everything in that I can, for what I think is working in this current market, and also sort of tips to kind of build your accounts. Last thing I will always say, I always bring them up, of course. I love Centerpoint. But check out the link. If you want IU for free and you sign up and you open an account with 50,000 at Centerpoint or deposit an additional 50,000, you can get IU for free. So 1 year for free if you open a Centerpoint account. And you also get 3 months free. So free commission for 90 days. And you receive a free IU annual subscription when you fund with $50,000 or more. So make sure you check that out. But let's get into Scan for the week ahead. And it's going to be a little bit choppy. It's going to be a little bit different than maybe what we would have been talking about had we not had some news after hours. And if you guys didn't see it, the United States rating was cut by Moody's. I don't know how much it matters. I think that there was something similar to this before. But, I mean, look, the reality is it doesn't really matter what you think. The market reacted. It faded. Maybe it was an overreaction. Maybe it was a Friday thing. Maybe they, bid it up. But we'll see. My hope is that we get bid back up and, maybe we're in this 591 range or so when we open, because that would give a nice push, and then failed follow through for all these shorts that are set up. And it's been a fantastic market. It doesn't matter if you're long or short. There's so much range right now, as long as, going back to what I said, as long as you're covering, right? When you nail $2 or $3 to the downside, as long as you've covered, great. If it goes 7 more, even better for the next trade. The only thing I haven't really worked on or I haven't done well with is if I can get long on those covers. It's always a work in progress. I always fail at that. But either way, CRWV, something that's for me, what I typically do is kind of look at where it had trouble or where it had support, right? So right around this 79.60 level, you can see it was a base, and then it starts to fade off. So in a perfect world, what I want to see is it kind of to go and clear out that level. And once it gets heavy, then I'm interested versus whatever that high is that day. If it starts to firm back up after it clears out, consolidates and starts to firm up, then I don't want any part of the short side. So also don't take, I'm not ever perma short bias. I've been getting along a lot of names. But I'm always perma opportunities. So I'm more confident on the short side. I trade a lot larger on the long side. But, I still do like to take lots of longs. Like I said, on QBTS and RGTI and all of these, just be cautious, trading all three at once, because you are 3x exposure. But at any rate, we've got really, really nice setups here. One thing I will say is, when the trade breaks, there's still so much downside, right? And one of the problems, I think, the last couple moves, there's this fear that you don't want to miss the trade, right? And, I think especially me on Friday and Thursday when I was trading them, nail those big moves. And we had a huge move on Thursday, which right over here, and ended up unwinding, beautifully. But same thing off the open. If you reacted to that big opportunity and you didn't lock in, then there's a good chance you might have been getting blown out. And then you go back to what I was just saying, you kind of create this ceiling. This is the prior high. So for me, what I would be looking for is if I'm going to get involved again, I'm either trading the parabolic move, or for a more patient trade, I want to see this prior high start to become resistance again and then fail to follow through under VWAP. So you can kind of see how that sets up there. Same thing with QUBT. It wasn't really reacting the prior day, more so just Friday. But you can kind of see the similar concept and what I'm looking for. For me, I'm kind of looking at where is the congestion. It doesn't have to be the exact high day. I'm looking where is most of the trading action happening. So pretty much everything over 1250, I feel like is shorts getting squeezed out. Once it breaches and stays heavy at that 1250, I like that risk reward. Same thing on QBTS. We had another nice one of those, but this is another example of this just V-shaped crazy recovery. I mean, if you're not locking in, going back to what I said, the most important part of the trade is the cover. It's so easy to end up in a bad spot by, overstaying. This kind of reversal is nuts, especially if you're trading size. It adds up fast. So right now, the market's not about being a hero and being patient. And, there's a lot of things that need to align for you to be patient. You need the market to be heavy. You need all the other names to be heavy. If you're trying to time the pullback on these, there's so many different things that are going into these trades. There's, the options is a big part of all of these quantum trades. And so anytime that there's a heavy options presence, in my opinion, they hang around longer than you think. And it's less important to nail the exact time for that unwind. It's, for me, big parabolic moves, big, give good opportunities, just like this. But be a trader. If you're looking for that patience trade, you need to wait until they actually break prior support. An anticipatory trade, anticipating that breakdown is not never, but more often than not, it's not going to get you there. It's going to chop you up. So be a trader until we break key levels of support, until it's obvious that that it can't bounce. It's staying heavy that day. So other than that, that's my quantum basket. Palantir, same deal. Nvidia, SMCI, those are always the same for me. I'm always looking for these types of trades. Same thing, Tesla. They obviously all trade similarly, but I'm looking at the ones that have the best range, the best opportunity. Which ones are maybe stronger than others? Which ones are starting to fade while the other ones are staying strong? And those are the ones that I want to focus in on. And RGTI had a lot of relative weakness on Friday versus its peers. What else? We've got AFMD was a really nice one as well. Failed follow through section. Failed follow through for me means I want some sort of jolt, some sort of push, and then I'm looking for a failed follow through. So this was a really nice opportunity. I actually tried it a couple times, right in the kind of mid 40s or so, and then I stopped out for a few cents. I tried it again, and then I started to hammer in and ended up making it most of the way into like the 28 to 30 range, but I did not make it back down to 20s, unfortunately. SYTA. This is another one, an example, and this is, in my opinion, you've got this nice steady, maybe a buy-in throughout the day, just momentum, whatever. But this move right here slams down. This is when everybody hammers it short. And if it does not stay heavy, right? So what happens after the clear out, what happens after the stuff is what matters, right? You hear me say that a lot. So when this goes down and it's, slams down, if it's not staying heavy and breaking trend, that should tell you something. The longer it goes sideways without breaking down, the more you should kind of take that hint that maybe it's not going to break down. And so what happens is starts to go, and then all of a sudden it doesn't let anybody out. And then they're screwed, and it's squeezed everybody out. And a lot of people probably just blew out into that and missed the trade. But that's the clear out move, and then ends up fading. So on Monday, I'd be looking for maybe some sort of 250 clear out, and then failed fall through momentum. Other than that, long side, these are continuation ideas. Not so sure I love this one anymore, but it's still got my eye. I traded this one. I was long. I sold some into the 148s range or so. But I'd be watching this one if it starts to firm up over 130s. Nice bounce this week. Same thing with kids. I sold the half, a little bit more than half into this parabolic move. This was a long trade we were starting to watch. This is a great chart, not a liquidity trap, but an example of what's working in this market. Former runners that just sort of fade down. You don't need to time the bottom, right? Because if you were trying to find the bottom, you're just going to end up with a bag. But watch for it to rebound. In my opinion, Thursday is sort of what I call a cleanup day. And so, when I say a cleanup day, they kind of bounce it, but they're in no rush. They bounce it and they're in no rush, because what happens is everybody that has a bag, it rebounds. They're either going to sell it or they're going to add more. And if you just let everybody win, then, everybody's going to have a really big bag of stock that they're just going to slam down as soon as it pops. So a lot of times you'll see these kind of ramp up, fade, and then the real move comes. And so they're kind of trying to clean it up, getting out the rest of the traders before we actually get a nice rally. So anyway, I still have some of this left. I'm not crazy excited. I'd like to see it over 4 if I'm going to be patient. If it stays heavy and can't reclaim that 390s range, then I'm not going to stick around. TMC was another trade that I've got on right now. Nice little breakout here. Good find in the room. I forget who posted it, but it was a good eye. CETX, I have no position, but just one that I am just monitoring just in case it starts to squeeze. IBO, same deal. This is, it was a liquidity trap on the daily. They've been holding it. So I'm not excited unless it starts to build over 58 or 60 range. Do have a small position, but again, for me, I need to see it over 58. And then last but not least, you guys should be familiar with this one, VSA. I've been watching it literally since this day. There was plenty of, it doesn't show it on the chart, but there was 3, maybe 4 occasions where it went to 60 cents after hours. So I had been trading that from basically 30 cents to 45, 50, 60 cents or so. There was the first 1 or 2 times I was pissed that I didn't lock in at 60 cents. But at any rate, it's been worth the wait. It's a triple now. And as I've said to everybody, you should be, potentially locking in a third or a half, make it a free trade, but this is obviously one of those that maybe they sneak up and do something crazy pre-market one of these days. Who knows? But slowly but surely it goes, and it's been a fun one. So there's always other ones that I'm watching. I always have that staying familiar section just to kind of stay, stuff like AEVA, which is nothing exciting to me yet, but it's definitely a chart that I want to set price alerts for. It's come up from 250 to 18 without a correction. So it's just like that pony trade that we had the other day. Just something that's gone up without really much of a correction. It's something you want to keep on radar. So typically what I do is I'll set price alerts. Whether it's if it's AEVA, I would set price alerts probably 19, 20, and then some downsides at 17, 16, just in case I miss it. That way it alerts me if I've missed the trade, and then I can make a decision if I want to put on any risk or not. So that is about it. And I hope you guys are all trading well. I hope you are meeting goals. I hope that you've been well. I do, miss the feedback and doing these at times, but I'm not going to lie. I do really enjoy the patience and unwinding and being able to unplug on the weekend. So I am very thankful for Chris and the rest of the team. They've been doing a phenomenal job. But like I said, Centerpoint, open an account, and you can get IU for free. But if you guys did not check out IU on any of the trials, then maybe next time just keep your eyes peeled, because we want you to use the technology. We want you to check it out, because I know that most people just think it's the same old chat room that back in 2012, right? And it's not. We got a lot of cool tools, and people are canceling their SEC filings, their scanners, their news services. I mean, we have AI news. So basically, in a layman's term or layman's explanation is basically moves that have happened before, PR, certain keywords, certain sectors, certain all kinds of different elements, as well as what kind of runs they've had in the past. All goes into kind of scraping whatever PR has come out and deciding whether or not it should spit that PR out. And it's really cut down a lot of some of the work that you have to do. For me, there's what I call news guys that are just so good at pulling PRs, the ones that matter. Why did you pick that one, right? Versus all the other ones. And if you're not following all of the moves, if you're not following all the companies, you may not know which ones are important. And I would say our AI news gets about 90% of what I care about anyway. But fortunately, we've got somebody like Judah, who is really good at picking out the stuff that matters. T530, which has always got the unique news and things like that. And obviously many other traders in the room. But that's it. 48 minutes. Geez, a long one. Who would have thought? But anyway, hopefully you guys have a good rest of your Sunday and have a great night. And you'll see, I don't even know if it'll be Chris next week. I think somebody else is going to take over because he's on his honeymoon. But yeah, have a good rest of your weekend.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.